All right, in this third video, I want to talk about support and resistance levels. Bob also calls them rejection levels. All right. One of the main ones that we talk about is what's called the distribution levels or the standard deviations on a market profile, which I'll briefly talk about, or the value areas. All right. You'll kind of hear Bob say, I'm taking a trade off of the VWAP or the POC. I'm going to wait for a pullback into the 68% or the 95%. These are the distribution levels that we're talking about. The next one is the momentum in the stacked and balanced zones. Joel, who programmed the footprint charts, made this really cool indicator, which is the momentum zone indicator. I'll talk about what that is. It's those red and green areas that you see on the charts. Then we'll talk about a little bit about low volume nodes, and then we'll talk about traditional swing high and swing low levels that also act as support and resistance. All right, Bob uses a 60-minute or a 240 for those kind of levels, and I'll just kind of show you what the concept is on a 5-minute chart. All right, first let me talk about what volume profile is, and then we'll kind of talk about what the distribution levels are and the value areas and the VWAP and all that stuff. Basically what volume profile is it shows you the fair price for the instrument. In this case, it's oil, okay? So this curve is always kind of a rounded curve, okay? And it's showing you right in the middle, that's the fair price or value for this instrument, for oil, okay? In this moment in time, this is the fair price for oil, all right? Now you have to remember, large institutions are trading. They're buying thousands and thousands and thousands of contracts. As a retail trader, we don't really have an effect whatsoever on this price, all right? Oil companies have all the inside information. They know how many pumps are going and how much oil they have and all this other stuff. And when they hedge their positions, they are hedging it so that they have the fair price or value. So each of these bars are showing how many contracts or volume has been traded at that price. So I don't know what price. Let's take this one, our largest price. I don't know what price this is. Let's say it's $68.05. For some reason on this day, the institutions said that this is the fair price. All right, and anytime that you get away from here, it wants to snap right back to the fair price. Okay, if it goes a little too high, it wants to come back. If it goes too low, it wants to come back. Perfect example is, let's say most places are selling an iPad for $500. And let's say there's a store down the street that's selling it for $800. Well, they're probably not going to sell that many iPads. All right, so they're going to want to come down to the 500 level so that they now have a fair price. All right, same is true if there's a place that's selling them for $300. Well, I would probably buy a whole bunch of them and then I would want to sell them and make, all that money back. So anytime price drops below fair value, it goes up. I mean, this is classic economics. Okay, there's a fair value for everything. Eventually, in the market, it finds what that fair value is. As soon as a lot of people, so if they put something in the market and people are buying it and buying it and buying it, eventually they're going to stop buying it because it becomes too expensive if they keep increasing the price. And then they have to come down a little bit in order to find that sweet spot as to where is fair. Okay, and that's basically what the volume profile shows. It shows how many contracts, the volume of the contract sold at a particular price. If it gets too high, it wants to come back to fair value. If it gets too low, start buying and you come back into fair value. Okay, well, these levels, all right, the standard deviations, the value areas, the distribution levels, all the same word, but they pretty much mean all the same thing. All right, we call them the VWAP, the POC, the 68%, and the 95%. Okay, first of all, let's talk about the POC. That's the easiest. All right, that is a point of control. That is the bar that has the highest amount of contracts traded at it, or volume. It's the one that has the highest volume. So this bar right here, I don't have the POC on this chart, but if I did, you would have that straight line right there showing this is our POC. That's the area where most contracts have been traded. All right. The VWAP is this blue, right? You can kind of see here I have VWAP. It's the blue line, right? That's what's called the volume weighted average price. What that basically is if you take an average of all of these prices and you take into consideration the amount of volume that was traded. So this price, all right, that has the most volume has the largest effect on this blue line, because it takes into effect that this has the largest volume at this price. It's weighted, it's weighting this. So our second highest important price is this one, and then the third one is this one, and then the fourth one looks like this one, and fifth one, and sixth, and so forth and so on. So it takes all the prices, it takes the volume into consideration, it does all the math, and it comes out with the blue line. Okay. And the blue line is kind of our magnet. It's kind of the price that really is our fair value. All right, and then you've got the 68% levels. The ones above the VWAP are called the value area high. All right, makes sense. The ones below are the value area lows. All right, and what they are is these lines are basically drawing roughly where 68% of the volume is found. Okay, so if you were to draw a line starting at this and go all the way back, you'd roughly be somewhere around here. And then if you take a line and draw it all the way back, you'd roughly be around here. And this region is where 68% of the volume has been traded. All right, then it's not weighted. Okay, that's the other thing. It's not weighted, it's just all based off of the area of where it is. Then you have the 95%. Go all the way back, and it shows you roughly where 95% of the volume has been traded. Okay, and as you can see, if price gets like too far away from VWAP, it tends to want to come back to it. All right. So it also, these lines actually act as rejection areas or a support and resistance. All right, so you notice how price is coming down, it hits the 68% dead on and comes right back into POC because that's where it wants to be. That's fair value. All right, it comes down to 95. 95, hey, oil is on sale, guys, big time. All right, buy it, buy it, buy it. Comes right back to POC. Well, it was on such a good sale, a lot of people bought it, went up to the 68 value area. Then it came back. Okay, and you can kind of see how it hits the lines. It goes to the 95 and comes back. All right, hangs out at the 68%, comes back, it goes here. And you kind of see how it hits these levels and it comes back. Now, there are times where it does break, okay, but then it can come right back up to it. Look, it hit the line right on. All right, here, lots of buying, but then it got to the point where it's, well, this is way too expensive. The fair value is, $80 lower or whatever. So it comes right back down pretty sharply because it's way too expensive now. Okay, and that's what we trade. We trade off of these levels, and you might be thinking, well, aren't those kind of like a moving average in a way? No, these are based on volume. It's based on volume and it's based on fair value. A moving average is just, it's based on what the price has been, and it just does a calculation. This is an indicator that is based on the volume and what is fair value. All right, so the trades originate from these areas. Okay, Bob has a trade which I'll talk about, which he fades the 95% levels. All right, if it gets way too out there and it's underneath or at the 95% level, all right, at the value area low, he's usually looking for longs because he's looking for it to snap back to the 68%, maybe even back to our VWAP. Okay, Same thing here. If it gets way too high, even here, it got really high, it's going to come right back down to the 68%. Now, there are times where it breaks out and then it starts going sideways and it makes its own new volume profile. Okay, but for the most part, we trade, we're kind of scalpers or really short-term traders. We are looking for trades to actually originate at these levels, and pretty much at the 95s, we're looking for it to come back into it. If we're at the VWAP, we're looking for either going up or going down. At the 68%, the same thing. Are we looking at it to kind of hit the 68 and the bounce off, or at the 68% and go back into the VWAP? Okay. The next one I want to talk about is these zones that Joel has programmed on the order flow. And the first one is this momentum zone. And I think this is like the coolest thing. I use this a lot. I really like this indicator. All right. I'm going to try to explain it. At first, it took me quite a bit of time to finally see it, but now I totally see it. All right. What it is, so in this case, it's this red kind of bar area, okay, or the zone area. These form when there's a gap between a 1 bar and a 3 bar. All right, what does that mean, 1 and 3? So there are 3 bars. Here's our first bar, this is our second bar, and here's our third bar. Kind of ignore our second bar, or the bar in the middle. What we're comparing is bar 1 and bar 3. If there is a gap between the bars, it creates a zone. That's what the zone is. It's the gap between the 1 and the 3 bar. Okay? What it's basically showing, so it's called a momentum zone because it's showing that this was a big push down, that this bar and this bar are not overlapping. If you notice, usually, so if you look at this bar, and this bar, here's 3 bars, but they all overlap in price somehow. Okay, these 3 bars overlap, these overlap. All right, even, all right, so this bar, and this bar overlap. These 3 overlap. These 3 even overlap, but then all of a sudden you got this huge sell going on. And that's showing you something is going on here. There's a big push down. There's a lot of sellers are coming in, and it kind of shows you that these 2 bars are not, in a way, overlapping each other. So it's showing you something about the momentum. Okay. The stacked and balanced zone, I don't have it on, but if you get, I think, 2 or 3 stacked imbalances, it will also show a bar. Okay, or a line across. So, but at times I don't need that because I can clearly see where the stacked imbalances are. Okay, but these momentum zones and the stacked imbalance zones act as support and resistance. Okay, because if this is showing you huge selling is going on, if it comes back, if it all pulls back into this area, there's a good chance it's going to reject in this area because we've had a lot of selling here already. You might have a lot of sellers still waiting to actually sell. Okay, I mean, it could have been that all of the sellers here got all their contracts and it came down and they all covered and made their money, but there's a pretty good chance too that maybe there was another few hundred or a thousand contracts that didn't get filled. All right, so that's kind of the idea. And Bob will kind of take these trades off of these zones when he sees these big, falls or a push up, and he sees these zones. All right, so you can kind of see on this example how it pulled back into here. All right, and then it dropped again. You can even see all the stacked and balancing kind of showing you. All right, here's my area of where I'm going to start surfing, and here's the wave. The wave is starting to come in. Okay, and you can see a few other. You can see a small one here because of this bar. The low of here and the high of here aren't overlapping each other, so you kind of have that zone here. Okay, there's even a small one right here as well. But when you get these big ones, that's when you know you have a big push. All right, here's another one. I kind of want to show this. because you can kind of see how it's pulling back. So I have a momentum zone. Here's bar 1, here's bar 3. See how they do not overlap between 1 and 3. So that's where the zone is. It starts at the low of this and it goes to the high of that one. All right, and you can see how it pulls back. Now look at this. It pulls back to the zone and look at where it almost stopped to, right underneath the stacked imbalances. All right, these are trades. This is a pullback trade that Bob would take. All right, how many times have you been in the room and Bob says, I missed it by a tick? All right, he'll put an order maybe right at this level, or he'll put it one underneath it, and it goes one right in front of it, and then it rejects. He misses it all by a tick, and people will front run him by a tick. Even if, in this case, if you did, all right, it would have hit your price, there's a good chance you would not have been filled with only 19 individuals right there. All right, so there's a good chance that this would have been a missed trade. These are the types of trades that are missed a lot because that's what he's looking for. He's looking for the pullback into these zones, and he's looking for them right underneath all of these stacked sellers, and that's a perfect place. And in this case, that would have worked out if you got filled. All right, and what you're going to want to start doing, which I'll talk about in other videos, is you want to put all of them all together. So do we have one of these zones at one of the levels? All right, and you can see I'm at our VWAP, all right, which is the blue, and I believe that the POC is the yellow. By the way, guys, your VWAP and POC are usually pretty close, like, to each other. There are times where they are kind of far away, but not too far away. They're usually pretty close because VWAP is showing an average of fair value, and the POC is showing the highest, like the most amount of contracts sold at that area, which is roughly in that fair value area. All right. So I like this example because you're kind of at our at VWAP. It's pulling back into one of the zones, and then on top of it, right underneath where all of the stacked sellers are. That's a beautiful trade right there. Plus, then on the next bar, you get stacked imbalances. All right, and and you're going to target right here at 68%. I'm starting to give you some hints as to how to trade this stuff. All right, here's a long. This is a great long, a perfect example. This really, again, it's going to show you a lot of more information here. Here you have a green zone in this case, the top of here to the bottom of here. So that's your gap area. All right. You even have stacked buyers. Notice it comes up. This is the 95%. It's pulling back. Here's a nice pullback into the zone right above. All right, again, in this case, we are right at that price. 74 people got filled. If you're right there, there's a good chance you would have gotten filled. And then look, it just kind of all takes off. We're also, which I'm going to talk about in the next slide, I chose this slide because it's a good introduction into low volume nodes or low volume areas. These also act as rejection. Okay, so you can kind of see how this pulled back not only to our zone here, a momentum zone, also the stacked buyers, but also this matches perfectly to a low volume area. Because again, you remember how I talked about our fair price. Our price wants to be at fair price. So if it's at low volume areas, it's going to want to increase up to it. All right, so that's kind of a neat example right there. All right, the third type, well, actually, I'll tell you what, let's just go to the low volume node since I talked about it. So the fourth one on the list I talked about was the low volume node. You can kind of see there's a bunch of little areas here which are kind of fair value. Obviously, that's the most fair because it has the most volume. That's also where our VWAP is. But you can kind of see a low volume area here. You can see how price comes down and rejects off of this area and kind of goes up. All right. Eventually it breaks down and look at where it stops, right at another low volume area. Okay, and it comes back up. This one, I love this example because it's coming up to a value area a low volume area. There's like some sellers here. That's not very impressive, but there's a lot of other things that are going on here. All right, and then on the next bar you have all the stacked imbalances. All right, and then kind of the classic old school is your swing highs and lows as support and resistance. All right, I believe this is a 5-minute chart, but Bob likes to use a 60-minute or a 240, which is a 4-hour chart. But just to kind of show you, a lot of you have probably seen this before, but let's just kind of take this area right here because it's a really good example. Notice how price went up, it got rejected, went up again, and rejected, again, rejected, again, it went up maybe 1 or 2 ticks, rejected. So obviously this is a resistance. Okay, notice it comes right back up to it again, and it rejects again. All right, so if there's other things that are going on in the volume, in the order flow that's kind of telling you short, I already have a support, I have a resistance already here. So as it's coming up and I'm looking, okay, this was resistance before, let me now look in the order flow and see if all the sellers are coming back in, or if I'm at a value area or something like that. And you kind of are starting to tie all these things all together. All right, here's a case, obviously it broke out. But now notice, look, it pulls back, and where did it pull back? What was resistance now becomes support. All right, what was resistance? Look at that, it's support. All right, notice it comes up to what was currently resistance, it backs off, it hits it again, it finally breaks, and look where it comes back to, right? What was resistance is now support. How many times has Bob said that? All right, this time it breaks down, and it comes right back up. All right, what was support is now resistance. All right, and then you can kind of see how this actually came down to there and popped back up. So these areas, all right, if you take an area like this and you match it up with a VWAP or a low volume node, or a situation where you have a stacked imbalance and a zone and a low volume area. Actually, I wanted to show you, yes, over here, notice I have the pullback. See right here, I have a pullback. It's coming up at a 68% low volume area, right up into these stacked little sellers. But what do you also notice? All right, I don't know if you see this, but look, here I have a 5-minute bar, another 5-minute bar, another 5-minute bar. Notice this was support for these 3 bars. It tried to break it and it didn't. Eventually it did, and what was support now becomes resistance. So you see how all these things all tied all together to kind of show you, hey, that might not be a bad short right there. Low volume area. I've got what was previously support, now resistance. I'm going up into these stacked imbalances. Okay, and then it's at a 68% level. And then on the next bar, I get stacked sellers. Okay, so notice how I'm starting to put all this all together. All right, we are a surfer hanging out in the right areas, looking at the right zones, the right areas, and waiting for that wave. All right, so I know this was a longer video, but there's a lot of information. So just to kind of review real quick, all right, the areas that we're looking for: VWAP, the POC, the 68%, and the 95%. All right, this is kind of our first thing that I look for. All right, then I look for, is there a zone, a red or green zone, and then occasionally I'll look for a low volume area. This is kind of like the cherry on top. I can have a hot fudge sundae, but do I really need a cherry? No, I don't need a cherry. Does it add? Yes, of course it adds. It helps. I like cherries. So if you have a low volume area in an area where you have a VWAP and a zone, hey, the more rejection levels you have at the area, obviously the higher the probability that it will reject. Okay, so hope this video helped to kind of just organize all the types of support and resistance levels.